So, I'm sure you've heard about life insurance and whole life and term life, but have you ever heard of universal life insurance? I mean, universal life insurance comes in a lot of different flavors. Fixed rate models, variable models. You can select various, equity accounts to invest in. But then there's something called an indexed universal life insurance, which allows the owner to allocate cash value amounts to either a fixed or equity index account. And policies offer a variety of well-known indexes like the Nasdaq 100, S&P 500, and these IUL investment accounts. They're everywhere. So I've been getting a bunch of questions about what are they? What do you do with them? What's going on? Well, let's start off with IUL insurance policies are more volatile than fixed universal life insurance policies, but they're less risky than variable UL insurance policies because no money's invested in equity positions. Now, these IUL insurance policies offer tax deferred cash accumulation for retirement while maintaining a death benefit. People who need permanent life insurance protection but wish to take advantage of possible cash accumulation via an equity index might use IULs as, critical person insurance for business owners, premium financing plans or estate planning vehicles. IULs are considered advanced life insurance products in that they can be challenging to adequately explain and understand, but we're going to try. So, how do these IULs work? Index Universal Life Funds. How does this, what's going on? Well, when you take out an Index Universal Life Insurance policy, your insurer will help you select the index to use for the cash value account, part of your policy, and your death benefit. So when a premium is paid on the account, a portion pays the cost of insurance based on the insured's life, and then any fees are paid, and the rest is added to the cash value. The total cash value is credited with interest based on increases in an equity index, but it's not directly invested in the stock market. If you own an indexed universal life policy, you can likely borrow against the cash value, in that policy. However, if you do not pay back your loans, they're deducted from the death benefit. Some policies allow the policyholder to select multiple indexes. IULs usually offer a guaranteed minimum fixed interest rate and a choice of indexes. Policyholders can decide the percentage, allocated to the fixed and indexed accounts. The selected index value is recorded at the beginning of the month and compared with the value at the end of the month. If the index increases during the month, the interest is added to the cash value. Now, the index gains are credited back to the policy either on a monthly or annual basis. So this sounds complicated. There's a lot going on. So let's look at an example. Let's try to see what's going on behind the curtains here. So let's say, let's say if the index gained 6% from the beginning of June to the end of June, the 6% is multiplied by the cash value. Then the resulting interest is added to the cash value. Some policies calculate the index gains as the sum of the changes for the period, while other policies take an average of the daily gains for a month. No interest is credited to the cash account if the index goes down instead of up. The gains from the index are credited to the policy based on a percentage rate. You're going to hear this be referred to as the participation rate. Now, the rate is set by the insurance company and can be anywhere from 25%, 50%, 75%, 100%. So, in our example of 6%, so let's say the gain is 6%, and then let's say the participation rate is 50%. And then let's say our cash value is $10,000, right? So we get the 6% times 50% times $10,000. That means we're going to have to get $300 added to our cash value. That's what we made for that month. Now, these IUL policies typically credit the index interest to cash accumulation either once a year or once every 5 years. So with like anything else, there's a bunch of advantages and disadvantages, right? And it's not, while not for everyone, these IUL insurance policies, they're a viable option for people for permanent life insurance with a cash component that earns interest plus a death benefit. Now, this type of life insurance is more expensive than term life insurance, but you get permanent coverage and a death benefit paid to your beneficiaries when you die. The policy may even increase in value due to the cash value component, and you may be able to borrow from your account. So, let's start off with the advantages. You know, low price, the policyholder bears the risk, so the premiums are low. Cash value accumulation, right? Amounts credit to the cash value grow tax deferred. The cash value can pay the insurance premiums, allowing the policyholder to reduce or stop making out-of-pocket premium payments. We got some flexibility. The policyholder controls the amount risked in indexed accounts, and the death benefit amounts can be adjusted as needed. Most IUL insurance policies offer a bunch of different options and riders, from death benefit guarantees to no lapse guarantees, and then there's the death benefit, right? It's permanent, not subject to income or death taxes, and not required to go through probate. And then we have less risk because the policy is not directly invested in the stock market. And then there's easier distribution because the cash value in the IUL insurance policies can be accessed at any time without penalty, regardless of a person's age. And then you have unlimited contribution, right? There's no limitations on annual contributions to these IULs. Now, of course, there's some disadvantages. There's caps on accumulation percentages. Insurance companies sometimes will set a maximum participation rate that is less than 100%. And then they're better for larger face amounts. Smaller face amounts don't offer much advantage over regular universal life insurance policies. And then it's based on an equity index. So if the index goes down, no interest is credited to the cash value. Now, investment vehicles use market indexes as a benchmark for performance. Their goal is normally to outperform the index. With IUL, the goal is to profit from upward movements in the index. So, is it even good? Like, is an IUL, is it a good investment? I mean, sure, it could be a good way to save money in a cash value account, connected to a market index, and it could earn modest returns, but it is first and foremost a life insurance policy, not an investment vehicle, right? And it is unlikely you will lose money in an IUL because insurance agencies set a guarantee to your principal to protect it against losses in the market. However, there's often a cap on the maximum amount you can earn, right? And then for most people, an IUL is not better than a 401k in terms of saving for retirement. Most IULs are best for high net worth individuals looking for ways to reduce their taxable income. A 401k it's just a better investment vehicle because it does usually come with high fees and premiums of an IUL. Plus, there's not cap on the amount you may earn, unlike an IUL policy. So, at the end of the day, unless you have a lot of money, a 401k is what the average person needs, not an IUL, right? But you've also got whole life insurance and term life insurance that you've been hearing about. Is an IUL better than that? Well, not necessarily. I mean, IUL insurance policies have an investment element, which can grow and earn interest connected to an equity index. And whole life insurance is a more straightforward form of permanent life insurance, with a death benefit and cash value component that acts like a savings vehicle rather than an investment account. So, I would say, if you're looking to get into one of these policies, insurance policies, don't start at an IUL. Right? Don't do that. If you're looking to invest, you need a 401k. Whether that's a Roth 401k or a regular 401k, just for retirement for the average person. And then I would recommend a whole life insurance policy is best for most people. And starting them, the younger you are, the better. And then, of course, the older you get, they get way more expensive. So just be worried about that. But hopefully, this is some good information for you guys. It's a lot going on here. IULs are very complicated. That's why I really don't recommend them to a lot of people. But if you're a high net worth person and you've got the money and you need to cut some taxes, might be your best bet. But I hope you guys enjoyed this video. If you did, smash that like button. If you're not subscribed to the channel, what are you waiting on? Subscribe. Come on. But till I see you guys on the next one, y'all be safe.